Okay, and welcome back. And this is today's date, 13th of March. Okay, so two signals I posted today, and let's have a look at the first one that I posted here at 11:54 a.m. UK time. I posted a long zone here, as you can see here on X, and then let's jump straight into TradingView.
A few moments later.
Okay, so as you can see here in TradingView, that the time I posted this was 11:54 on X. Put a first blue line here so you can see it, and put a second blue line here, and this is for the second post that I put up for a short, but we'll get into that in a little bit later.
Okay.
At the moment, let's go through this long that we should have looked at, and I've slightly changed the I put steps here in TradingView so I'll explain why and what I'm looking at.
It is what it is. It is what it is.
I would not have entered a single trade here because basically you can see here as the 20 MA starts to slope, you see, price coming up and these areas starting to make and lower lows, right? So you can see the first bit. What I tend to look at is come towards the 20 MA, and if the price continues to move back down, then obviously, I'd like to see a bit of a break, like a higher high to get trend confirmation. So if you look here, I mean, really in this trade, you can see you see a total trend reversal here potentially. So I would not have entered this trade. The ideal time and the entry criteria that I would have looked at, if you look towards the bottom of the chart here, where it crosses the 20 MA, and then it comes back down to retest the lows, and then it breaks these highs. That's the ideal setup that we look for. Yep, to confirm that that is the long position, and ideally that should have continued in a long position, but that's what we generally look at. But I mean, if you look here, it's just it's a downward trend, and even though it's on a minute, my signals later on told me that the second blue line here that we have is changed into a short position. So we can class this as a loss, maybe. I would not have taken this entry myself. So
Me personally, I wouldn't take this level of disrespect.
yeah, that's the first one out the way. Okay, so as you can see here on X, this is the second entry that you would have posted up on X at 1:07 p.m. UK time, just before the US Open. I would have said, look for a short position.
Ah, you're teasing me. Naughty, naughty.
So let's jump into TradingView. Okay, so as you can see here in TradingView, the blue line is roughly around 1:07, where I pointed out on X that we're looking for a short position. And here you go. I mean, look, if you want to class the other one as a loss, class it as a loss, and the second one that I look for, short position, I mean, this one played out absolutely beautifully. Look, you can see here. We're looking at what, including spread, probably I've added here 15 pips stop loss, and then we're looking at risk reward of what, 7 over 7. What do we aim for? Let me hear you say it. 4 to 5. So you could have managed this out to maybe 6 or maybe 7 if you wanted to, however you wish, or break your trade out however you want. But I aim, like I say, 4 to 5, and this one worked out absolutely nicely. So what I want to do also is let's just have a look at the TradingView chart with the steps that we used previously in the previous chart that we looked at for the potential loss. So let's just have a look at that in this trade. Okay, so this is the chart with the steps in it. So as you can see here, what we look at, you can see the market was making sort of higher highs on a 1 minute chart, and then as you can see here, exactly what I look for is those breakouts for those areas where price is sort of making higher highs, and it's also making lower highs, and then we want to see a little bit of breakout, maybe a retest to come into that area. But if we get a nice little breakout that comes out, I mean, that's exactly what we look for in order, and especially at volatile times. So at this one has played out nicely. So yeah, so this is the alternative view that I really want to show you, is in terms of when we look for our entries, is to be above the sort of the 20 MAs, and then the breakout of the lower highs. So that's the key to this, and also the key I keep repeating is the risk to reward and money management. So yeah, it should be a day over. Okay, hope you've enjoyed this episode. It's been a short one, but look forward to the next one. Take care. Thanks. Bye.